the things that I've been hearing a lot about these last couple of weeks, probably the one thing that's inundated my inbox more than any other request is, Raghee, this has been a tough couple of weeks. How do I manage risk? And, I don't want to be salt in a wound where I say, well, no, it actually hasn't been really that tough a couple of weeks. It's just that we've had some volatility. And so the idea of how do I manage risk is always a great conversation. So I'm going to talk about a trade that we took in the mastery and in the futures room. I'm going to talk about the ways in which you can take it. And when we have more volatility, what are the choices you can make? Because we had a amazing sort of just squeeze, grind higher on the S&P. Yes, SPX, SPY, MES, and of course, ES are all part of the choose your own adventure of this trade. So the last 2 days were the most challenging for me on the futures side, but I'm going to talk about futures and ETF calls in this conversation because I know not everyone trades futures, but I know a lot of folks like to trade SPX and SPY calls. So really nice Tuesday, really nice Wednesday, and then this was Thursday and Friday. This was the ZB, this was the ES futures, right? But overall, it was a good week. And how do we make it so that if you're not having some steady weeks, what can we do to manage risk and what can we do to take advantage of what's been pretty clear directional bias? Well, let's start with directional discernment. I'm going to show you the notes that I give members on this video. And we started off our day trading the open session with an assessment of directional bias. Notice that before we even get to trade number one, we spent a few minutes looking at the direction of the Dow, the direction of the NAS, the S&P, the bond, and crude. Everything about today was bullish. We were above the line in the sand, which is a previous session close. We were in an uptrend on the Dow. We were seeing lower yields, which is the uptrend on the bonds. We had uptrend on crude. Crude moving higher is usually a good sign of risk appetite. So right off the bat, after looking at just 5 symbols, bullish directional bias because priced above the previous session close, and those individual pieces, NAS, S&P, Dow, were either neutral or bullish. And by the way, the two neutral symbols, the S&P and the NAS, before they went neutral, they were actually bullish. So here's your bullish market structure way early in the pre-market, and then we had the organization back to bullish structure once the bell rang. And the NASDAQ was the same way. It was bullish before the bell, and then we saw a lot of volatility. So first things first, what created the volatility today? And why were a lot of traders caught off guard? I was too. I was not expecting Apple to have a moment like this. In fact, if anyone out there ever wonders what does high concentration weighting mean, gang, this is it. Apple, pretty much by itself, right? Sold off, drugged the NASDAQ, drugged to a certain degree the S&P with it. Why the NASDAQ? Apple's the heaviest weighted stock in a group of 100. Apple's the heaviest weighted stock in a group of 500, right? High concentration weighting matters, and you can see the way in which it just drug the NASDAQ first and the S&P lower. Well, when we realized Apple was sort of the reason for this weakness, we immediately moved away from the NAS and started focusing on the S&P, right? So that was the first thing that I began to do. So we had this big sell-off there we go, the big sell-off right there on the NAS, big sell-off on the S&P, and that was caused by Apple. But the way in which the S&P sold off was more tempered because Apple's less concentrated, 500 stocks, and the Dow is pretty strong, and that helped the S&P be more resilient. Now here's where it's going to be a little bit, so if you need to pause this a couple times, I promise this is going to be worth it, okay? This was a fantastic day for us. It should have been even better. I'm going to tell you what I did well and what I did not so well, all right? And hopefully this is something that will help. All right. First of all, we're in a pretty nice trend with Dow strength, and I'm in a nice green uptrend. So that opens the door to what I call the least of the hourly price movement range. It's the least amount of volatility-based support that I can even think about buying. Well, again, that wild card Apple, which I have to say no one saw coming, because you know this why? Because if a stock or any index is making a dramatic move, the drama comes from catching us all off guard. And that started to create more heat in an aggressive position that I was willing to take. It was 9 points of heat. So I said, you know what? I've got an aggressive small position built at 42.59. And I went ahead and said, you know what? I need to stop the bleeding. I need to focus on how to manage risk. And I took the trade off the table, 9 points. This was my first mistake, not the stop loss, but being aggressive. Using the aggressive level on a non-farm payroll Friday. Of course, we make mistakes. I don't care how many decades I'm going to trade. I'm going to make mistakes. I got too aggressive. I wanted to be a buyer. Had I waited for my hourly price movement range, and those of you that are listening to me right now, a lot of you have my hourly price movement ranges. And I got some emails after I was in the Mastery in the Futures room saying, Rag, I don't know how you missed that, Teach. We took this trade, and that, I got to tell you, makes me really happy, right? Because I got aggressive, by the time we stopped out and Apple's selling off, I didn't buy here. Look at that's the beautiful trade. Okay. So that's the first thing. So yes, I'm kicking myself a little bit. But look at the structure, look at the zone, and this is what I'm hoping to point out, right? I don't like pointing out things I could have done well, but I know it stings for me, but hopefully it helps you. What else did we do? Well, you'll also see we bought where are they? Here we go. We bought the 424 calls for June 2. So these were zero-dated options for the SPY. We bought the 424 call. These were very inexpensive. Remember, these are depreciating assets. They expire today. All I need is a little bit of strength. All I need to do is buy these things on weakness. So the same time that I'm buying the ES with a limit order to buy, I can start bidding on these June 2 424 calls at that same level. In this zone here, where we took 9 points of S&P heat, I only took about 12% risk on those SPY calls. That's very little risk. I'm willing to take almost double that on options. So to give you an idea, for every $10,000 in an account, we were allowed 8 to 9 calls. Right? That's how many calls we were able to buy in a $10,000 account. So you ask yourself, well, Rag, I've got a $25,000 account. Cool, right? So you just basically say, okay, I was allowed 9, right, and 5. That's the way we would break that down. So you ask yourself, how many options am I allowed to buy? Cool. So some of you might have had 9 calls. Some of you might have had 23, right? Okay. So risk and position size is based on the account. Then we just step back and get out of the market's way. This should have been a trade where I was in the ES and the SPY. I hope it stings in my memory because I'm really disappointed in that. This should have been a monster day, not just a good day. Okay, so then now we've got the move higher, and we exit at 3:50 p.m. at latest, at the very, very latest. Our second target, let me scroll down here. So see how I managed this live with everybody. You know, we have 25% risk, right? And then the 424 calls cost us $1.40 each. So when you saw, Rag, what would those 9 calls cost me? $140 each, right? Zero-dated options as they just squeeze, as they grind it higher. By the way, why the zero-dated? I don't want to pay for more time than I need. I don't need more time than this, so I'm not going to pay for next week's expiration. I just need this to maybe take me through noon or 3:50 p.m. and I get out. Okay, so I walked through a lot of budget, and then here's the rest of it right there. We scale out at 42.96. That's the trade. That was the second scale out. We moved to break even, and then we moved to a trailing, and then we moved to 42.96, and the ride was over. That's it. And then whatever was left, we exit. Why do I bring up the SPY? Because, gang, a lot of traders who are trading the S&P ES in this environment, when we have volatility like we saw what Apple triggered, at $50 an S&P point, that is not appropriate for the small account. A lot of folks are finding that out when we see volatility. Micros are okay, but their ridiculous commission makes them kind of not great. And here's a problem with micros. They allow for looser risk management. And if you scale a looser micro risk management approach to eventually 10 or 20 micros, which are 1 to 2 minis, all we've done is ingrain bad habits that are not affordable once we go to size, right? That's why I encourage a lot of futures traders when we're in a very unpredictable, uncertain, post non-farm payroll environment. Use the SPY. Don't worry that you're a futures trader. Futures trading is my first love. But had I not had those SPYs, I wouldn't have had a great morning. I would not have been able to withstand that extra volatility that Apple injected into the market today. I hope that makes sense. This is how we took advantage of 0 days to expiration SPY as they squeezed higher today. Overall trend, bullish bias. Notice we got the directional bias, that discernment first, and then we focused on the long side. I hope this helps. I know it's a longer video. I know I got into a lot of sort of granular, but I can show you what we did in the rooms, but I want to get into a little bit more detail as to how a difficult day, maybe like today, really could have been a good day. And for those of you thinking, Rog, I don't have the capital to trade the mini, and I don't really love the micro, I'm with you. How do we trade the SPY? This is how we do it. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.